And so the question is, why do so many small businesses fail? And one reason that they fail is because they fail to plan. They fail to create intentional outcomes. They fail to create steps and goals to get to the things they want. Not only do they fail to plan, they fail to capture the ROI, the return on investment. I'm really excited to be with you guys today to talk about a very interesting topic. But before I go on, I do want to let you know we do got some events that are happening. We have a Profit First Masterclass. Yes, a Profit First Masterclass where I am going to be teaching you the ins and outs of Profit First. We're going to be showing you how to implement Profit First in your business. Today, what I want to talk about is I want to talk about creating intentional results in your business. Yes, creating intentional results in your business. And you guys know I work with entrepreneurs, primarily, actually exclusively, all of our clients are entrepreneurs. And one of the biggest things that I see that makes a difference in their results is creating an intentional business, meaning creating intentional outcomes, not leaving their business outcomes to random results. And before I begin, I'm just going to ask you guys that are out there, how many of you guys actually sit down, right? And you actually pre-plan the results of your business, meaning that you can actually determine where your outcome is going to be before you even begin. How many of you guys do that in your business? Do you pre-plan the results of your business? And I'm curious, how many of you guys actually predict the outcomes of your business 12 months before it actually happens? And what method are you actually doing in order to do this? What are you actually doing in order to get those results? What method are you actually doing? There are many ways of doing it. There are some people, the most common way of doing it that I've seen is budgeting, right? They create a budget. They go, this is what I project my income to be. These are my expenses. And this is where I should land up. More sophisticated companies, they start to get into projections, right? They get into projections and forecasting. And they go, if I put this much money in my business, if I invest this much money in my business, this is the outcome I'm expecting. This is how many new clients I plan to get. If I invest this amount, what that revenue looks like, and then also what my expenses need to be in order to grow with that revenue, right? And then there's historical analysis, right? Some people use historical analysis where they actually, will look at their past and they go, okay, this is how I did last year. These are the things that work. These are the things that generated new clients, new income. Let me go ahead and repeat that in order to exponentially start to grow my results, right? So those are some of the ways that people kind of pre-plan their outcomes in their business is by doing that. Now, I noticed for myself personally, many, many years ago that if I pre-plan my results, right? And what I mean by that is if I set goals, right? Not just set goals, wrote those goals down, wrote down the things that I wanted to accomplish, right? And these goals. What I noticed is that if I wrote down these goals and I created steps, right? And I created steps to get these goals. And then I actually track the progress because what gets tracked gets measured. What gets measured happens, right? Those are things that have priorities. What I actually found was that I would actually hit my goal if I actually created a goal, right? I would actually hit the goal. And even in times where I didn't hit the goal, right? Like maybe I was a little bit too aggressive. Maybe I was hoping a little too much or maybe something just went wrong, right? Even if I didn't actually hit the goal, what would happen was I would actually end up much farther along before, I actually got there, right? I would actually get farther just by planning, right? Just by planning, just by creating a goal, creating steps to get there and tracking that progress, I would actually get farther along than I actually planned, right? And so there's something to say about actually the importance of goal setting. So actually setting down those goals and creating those intentional outcomes, right? It actually really, really works. And so today, let's talk about goal setting. Let's talk about goal setting. So first of all, I got a statistic and it's not a very fun statistic, but it's a real statistic that I think we as entrepreneurs need to be aware of, right? The SBA, which is the Small Business Administration, tells us that 20% of small businesses are going to fail within their first year. Yeah, like 20%, literally 1 out of 5 entrepreneurs are going to fail in their first year. That's what the SBA tells us. And then 5 years down the line, right? So those businesses that they make it to 5 years. What happens is 50% of them are going to fail in the first 5 years. So 50%. So half of these businesses that are starting aren't going to make it to year 5, right? And then after 10 years, for you guys that meet that whole, decade, you guys actually making it to the 10-year mark, there's only a 35% survival rate, right? So what it means is, what the SBA is saying is statistics are against us as entrepreneurs, right? You guys know as entrepreneurs, it's not easy to build a business, right? Not everybody can wake up one morning and say, I want to start a business and I'm going to be an entrepreneur. Not everybody can do that, right? Not everybody is meant to be an entrepreneur, right? Not everybody's meant to be an entrepreneur. And, there's nothing more disheartening, right, to watch a business fail, right? Because for someone to start a business and to plow their time, their money, and I'm going to even go as far as their passion, right? Because nobody starts a business that they're not passionate about, that they don't believe in, right? It's actually disheartening to watch a business fail. And nobody intends to start a business that fails. No one wakes up one morning and says, I'm going to waste a whole lot of money today and a whole lot of time and a whole lot of years of my life. Nobody has that dream to have a business that fails. And so the question is, why do so many small businesses fail, right? Why do so many small businesses fail? And one reason that they fail is because they fail to plan. Okay. They fail to plan, right? We talked about intentional outcomes. They fail to create intentional outcomes. They fail to create steps and goals to get to the things they want, right? They fail to plan. And not only do they fail to plan, they fail to capture the ROI, the return on investment, right? And what happens is when they don't capture the ROI, they don't have a plan, right? That's working, that they're monitoring, that they're tracking. What happens is they ultimately run out of cash, right? They run out of cash. And that is so not fun, watching businesses run out of cash, right? Not fun at all. And so what happens to these entrepreneurs is they invest, they reinvest, and they have no solid understanding of what it actually takes in order to get that ROI, to get that money back, to get that cash flow positive, right? They have no idea what it takes. And then another thing that happens is they fail to test and really get a proof of concept that their idea is working. And so let's talk about it. Let's talk about how do you create intentional results in your business? How do we do that? And I'm going to say number one, it starts with creating intentional systems of profitability. So creating systems that create intentional profitability in your business. And it's interesting because as a CPA and as an entrepreneur, I meet tons of entrepreneurs every single day. And, they're bragging about their revenue. They're so excited. I hit 7 figures. I hit multi 7 figures. And the reality is, revenue doesn't necessarily always matter, right? Revenue doesn't always necessarily matter because you could have all the revenue in the world, but it doesn't mean that you have profits, right? It's profitability that matters, right? In fact, I'll tell you that the average $1 million company out there, they're only bringing home $100,000, okay? And you guys know how much work it takes to make a 7-figure mark. They're only bringing home 100,000. A lot of them will be better off getting a job, right? And part of it is that, revenue, it's important, but it's not the determining factor of profitability, right? It's not going to be the thing that makes you make it, right? It's really having a system in place to create that intentional profitability is really what's important. I love the profit first methodology, right? We use that in our firm. I love it. It's a tried true system. We've been on it for years. It never fails us. And the great thing about, having a system is it doesn't matter what your revenue is. If you have $1, you can be profitable, right? If you have a system in place that forces that profitability. And, what I like about Profit First is that Profit First uses bank accounts. And what happens with these bank accounts is just like the Dave Ramsey envelope system, right? You create bank accounts based upon purposes. So you have a bank account for your revenue. You've got a bank account for your profit. You got a bank account for your tax. You got a bank account for your owner's pay, and you have a bank account for your operating expenses, right? And what happens is you're forcing money twice a month into this profit account. So you're using sheer physics. You're forcing money into your profit account. You're forcing money into your owner's pay account. You're forcing money because you're going to have to pay taxes, right? Into the tax account. And then what's ever left over, right? That's going to be your operating expenses. And that's all that can get used for operating expenses. It's what's in your operating expense account, right? So you're forcing that profitability to happen. You're creating a cash management system that's forcing that to happen, right? You're creating that intentional profitability literally day one. Whether you have $1 in sales or you have $1 million in sales, you are creating intentional profitability. And again, it's sheer physics. It's just sheer movement of money. You take money from one account to another, and that's your profit account. You're forcing that profitability to happen, right? And that is how you are going to create an intentional bottom line. So let's talk about the second thing. Let's talk about the second thing that's needed to create an intentional outcome for your business. Second thing that you're going to do to create intentional outcome is make sure what you're offering is a sound product or service. Okay. So make sure what you're offering is a sound product or services. And it's interesting because, as a CPA, I'm telling you, one day I could write the horror book from CPA standpoint, right? I see too many businesses, they're excited about starting their business. They've seen something online, somebody's approached them with this great idea, or a franchise has approached them and they're super, super excited, right? And I've seen too many businesses literally jump into a new product or service and start a business. Too many of them do it. And what happens is, they invest all of their savings, they drain their 401ks, they even go to the bank and take out a loan because, one of the things they teach them is to create a business plan of how you're going to use this money, right? And they know that their idea is just going to work, right? They just got a gut feeling, they've been approached by someone that seems like they're super successful, and they just know that their idea is going to work. And it's interesting because, I'm gonna actually challenge you. I'm gonna challenge you. I said, you know what? Instead of borrowing money, instead of like draining those 401ks or depleting your savings, what I want you to do is I want you to grow at the speed of cash. Grow at the speed of cash, meaning that you're not going to make a huge investment, up front. You're not going to take all of your savings. You're not going to drain your 401k, right? And you're going to use cash, right? You're going to decide up front, this is what I want for my initial seed money, my initial capital investment, right? This is what I'm willing to lose. Because every time you start a business, there's risk, right, involved with that. And I'm going to decide to grow at the speed of cash. That is what I want you to do. And what that means is if you got a great idea, that is awesome. You're going to be able to keep reinvesting. You're going to keep earning more. If it's not a great idea, it's going to fall faster, right? It's going to fall faster. You're going to run out of that initial seed money, right? You're not going to be able to do it. And what's going to happen because you're growing at the speed of cash, right? You're not taking out loans. You're not draining your 401k. What's going to happen is you're going to lower your risk, right? You're going to lower your risk instead of just going all in and saying, what, I'm going to spend every single thing that I have and I'm not going to do that. I'm going to lower my risk because I'm going to grow at the speed of cash. Because one of the things that's going to do it, it's going to protect you, right? It's going to hedge you because now you're not relying on loans, right? You're not relying on loans. And what's going to happen is, the problem with relying on loans, right? And taking loans to fund your initial investment that you don't really know if it's going to really work out. It seems like a great idea. You've been approached about it, right? Is that, you risk not only getting a return on investment, right? If you use loan money, but if that investment falls through, right, which like the SBA tells you statistically, there's a big chance that it's going to fall through, right? You're going to have to pay that loan back, right? If you take loans, you're going to have to pay that loan back, which is, adding salt to a wound, right? So you don't want to take out a loan to invest in a business venture, have it fail, and then still have to pay the loan back, right? That's not working for you. That's not what you want to do. And so we're going to invest at the rate of cash, right? And what I recommend doing is doing something called a test of concept. But what a test of concept is says that instead of going all in, right? Instead of draining my savings, getting a loan, draining my 401k, what I'm going to do is I'm going to start with a smaller order, right? Start with a smaller order of inventory, a smaller amount of money that you're going to invest if you're going to do a service offering, right? Start with a smaller amount and then learn how to sell that. Learn how to sell that small order product, that small service offering. Learn how to sell that because there's going to be lessons that you're going to learn along the way. You're going to learn how does the market react to this new software that I'm putting out? How does the market react to that, right? And you're going to start to learn, who is my ideal customer? Because you're going to notice that there are certain groups that are more excited about your product, right? That's going to be where you're going to put your advertising and your time at, right? You're going to learn who your ideal target customer is, right? And then you're going to want to reinvest from there, right? So as you find out your target audience from that little sample, right, that proof of concept, you're going to figure out where to reinvest, where to target your audience, and really how to build your platform from there. And then the last thing we're going to talk about today is monitor your metrics and use your projections. Know your projections, know your numbers, know where you're going to end up, okay? Know exactly where you're going to end up, right? And what I mean by that is understand what is the cost to acquire a client, right? What is the cost to acquire a client? So if you've got advertising spend going on, or you've got a sales team that's going on, right? And you know how many dials they have to make in order to make a sale, how many calls do they have to have, how many consults they have to have, how many dollars in advertising to generate a lead, understand that cost to acquire a client, right? And not only that, understand your fixed versus variable costs, right? Because for you guys out there, fixed costs, those are the costs that you're going to have every single month, like your rent, right? If you got a rent, it's probably a contract, right? And it's going to repeat every month. And then variable costs, those are the costs that are going to increase as you grow your operation. So if you've got if you've got a manufacturing company, right, you're going to have more utilities, right, as you manufacture more, right? If you have a consulting business, you're gonna have to hire more people in order to get to service your clients as you get more clients. So understanding that variable cost. Too many people go into a business and they think, okay, this is my fixed cost, how much I'm gonna make. If I keep growing sales, I'm gonna keep growing my bottom line. You gotta also consider the variable cost, right? And then once you know your cost of acquisition, right, how much you need to spend in order to generate revenue, what your fixed and variable cost is, then you create a cash flow projection, right? You create a cash flow projection of when am I going to turn positive in my cash flow? When am I going to recoup my investment, right? You want to create that positive cash flow, right? You want to understand that investment. And you want to understand, does my initial investment, that I'm putting in to start this business, is it going to be enough to carry me to the point that I turn cash flow positive when I can cover my expenses, right? Because you don't want to start a venture and not have enough money to complete it, right? That's the last thing that we want to happen, right? So you want to create that cash flow projection, understanding your costs, understand the cost of acquisition, understanding your price point in order to create that. I personally love that scripture is in Luke 14:28, and it says, suppose one of you wants to build a tower. Won't you first sit down, estimate the cost to see if you have enough money to complete it? For if you lay down the foundation and are not able to finish it, everyone who sees you will ridicule you, saying, this person began to build and wasn't able to finish it, right? So what I'm saying, entrepreneurs, is finish strong, right? Finish strong, create intentional profits through powerful cash flow systems like Profit First. Creating that test of concept. Don't just dive right in, right? Just test a little bit more, right? Test a little bit more to make sure you're in a product or service that's going to allow you to really grow and scale, that has the market, right? And finally, create those cash flow projections. Create those cash flow projections that's going to help you predict where you're going to go. I hope that today was really helpful for you guys. It was really wonderful spending time with you guys. And until next time, may the profits be with you. I'll see you guys next time. Bye.